My name's Justin Apostolo. I'm born and raised in Texas, but I've been an accounting student in Southeast Idaho for about 3.5 years. I'll be graduating here in a year or so, but focusing on financial planning and getting my CFP. So I love doing information interviews with professionals that I find on LinkedIn. And I mean, you have over 12 years experience. So obviously I'm sure you have a lot of wisdom under your belt now from the tax side of things, which I'm really interested in.
Yeah, no, it's one of those things where I think for a lot of tax professionals where they're like, oh, I've been doing this 30 years. But then you talk to them and it's like, no, you've just been living the same year for 30 years. So you don't actually I'm shocked. Like I was talking to a tax professional the other day who has been in the industry a really long time. And I was like, oh, I'm really hoping that TCJA, which is like the biggest tax change we've had, and was under Trump, and a lot of the provisions are getting ready to sunset. And this was prior to the election. And I was like, oh, I really hope that TCJA doesn't sunset. And he was like, what's TCJA?
He didn't know?
He didn't know.
Wow.
And I was like, okay. And this was a CPA too. So I'm like, yeah, years of experience don't necessarily correlate to knowing what's going on. But yeah, no, I'm happy to have the conversation. And I think you're on a good path. Like I think it can be a really good combo to have the financial planning and the tax, as long as it's intentionally done.
Definitely. My previous internship was a very intentional firm that they had 2 EAs on staff and everyone was tax certified. So a big part of the firm was filing and tax strategy. So I didn't serve during I wasn't there during tax season, but I just after tax season, and got to do a lot of tax projections and late filings, which was super insightful for me.
Yeah, that's great.
But I see, you're now an entrepreneur, right, with Dominion, but that's only been for 5.5 years. Before that, you've had another 7 years under your belt. Like, what caused that entrepreneurial bug inside you to open your own practice?
Yeah, so I knew back when I was in college that I wanted my own practice. So it was something that I've been building up to for a long time. And so when I worked other roles at different firms, I didn't go Big Four. I wanted to work for smaller firms because I knew that was going to give me a stronger skill set into being able to launch my own firm. And so I worked at the other firms until I felt like, okay, I'm technically competent enough that I'm okay, running things, and I'm not worried about taking it's kind of, I feel like in the tax industry, the big thing is you don't have to know all the answers. You just have to know the red flags. Because you can go and research stuff and figure out what the right answer is, or, oh, I'm out of my depth here. I need to hire an outside professional to do this, somebody who's more technically competent in some niched area. And so it's really just around learning where the red flags are, and in my opinion, than you trying to master it all. Because the tax code is just so complicated. You're not going to be able to master it all. It's always changing. And so it's really just about having that good canny sense of, oh, I need to look into this. There's a weird thing about when you have these kinds of transactions, or, oh, we got to watch out for this, that, and the other. And I'm going to go look it up and see what the threshold limit is. And being able to build like good checklists. Because honestly, I think for most tax professionals, it just comes down to process. And are your checklists robust enough that when you're doing work, the quality control is there? Because I talk to a lot of tax professionals who are super smart, but they don't have like good checklists. And so their quality control isn't great. And that's when problems happen. So that was what, I worked at the other firms and then started Dominion. I always, and then my experiences at the other firms, there were certain things that I didn't like about how they were being run. And a big piece that I didn't like was the lack of emphasis on tax planning. A lot of like traditional CPA firms, they are focused on just doing the tax prep work and not the tax planning. And most of the time when you have more complex situations, so when people are not just W-2, or if they're like a complex W-2, they're really looking for both. And a lot of tax professionals will kind of give tax planning advice like off the cuff, or it's like just half baked, rather than seeing it as, no, this is an actual service that needs to be productized. It needs to have quality control. It's something that we actually need to invest into making it a real product for people, because it's what they need. Like filing the forms correctly is table stakes. If you're a complex business, it's really about getting the planning done so that by the end of the year, we know what's going on in those tax returns. But it just depends, right? Like it depends on who your niche market is. For me, I prefer that. But for a lot of tax professionals, if you're doing simple returns, you don't have to lead with the planning. Like you are just focused on the compliance. So it just depends on who your niche is and who you serve as clients.
It's funny that you share that as like kind of one of your insights, because that was one of the podcasts I had listened to, or one of your shorts actually, about the client that came to you had the S corp that was negative, net negative, but yet he had a very high W-2, and so he was advised to do Roth conversions. And I was like, wow, that's something like that. You need to have the processes there, like the red flags that you mentioned. And I know we don't have too much time, but maybe I can push down to one of these kind of later questions I wanted to ask. But what's your methodology behind finding these red flags? Because one of the things, so I'm president of my wealth management society, and yesterday we did an activity where I tried teaching our students how to be researchers, how to figure out the issues and where to find the answers, because you're not going to memorize everything, like you said.
Yeah.
But what's your methodology? Like whenever you take on a client, like a new advisor or an investment banker, and what's your methodology of going through their tax situation so that you can see how things are lining up?
Yeah, so I start with an assessment process, and I'm, financial advisors do the same thing, right? And so I've spent a lot of time engineering that assessment process to really go through all of the areas that I think that they're going to have issues in. And then also going through areas that aren't necessarily my expertise, but that I've learned over time need to get addressed. So like a big question that I ask early on is like, is all of your estate planning up to date? I can't do that work, but it's funny. The number of advisors who are like, oh yeah, I haven't dealt with that yet. And I know I should do it. And it's like, okay, well, it's not something that I can do, but the fact of bringing it up to them, or, just different things of like, I asked the question in my assessment, like, are there other professionals that you feel like you need in your life right now of any caliber that I might know somebody, and it's really trying to tailor when you're doing checklists and questionnaires of like, every time I go through the assessment afterwards, I'm like, is there something that they said or something that was part of this situation that I should be fishing for next time, or that like it was missing and should have been included? And then in terms of like the actual tax work, the big thing is really knowing the complexities of whatever niche it is that you serve. So if your focus is on business owners, like my checklist to do a corporate tax return is really different than my checklist to do a tax return where it's like a simple W-2, or even like a kid's tax return. Like those are different scenarios. So I think as an advisor, probably on the similar pain, like as a tax professional, is really look at the person who you're serving. And it's like, well, I need to make checklists for being able to make sure I've hit everything. And who's the person that I'm addressing this to? What's the situation that we're dealing with? And where are they in their stage of life for me to adjust that accordingly? Because the advice and the things that I'm looking out for when I'm talking to an advisor who is wanting to go RIA is going to be really different from the advisor who is, we're in active exit planning and they're trying to sell their business. Like those are just very different things. So I think that's where I would recommend people start.
So it sounds like you honestly really run a holistic practice, going into the estate, especially like when I took estate planning about a year ago. It was mind-opening to see the pitfalls that people can go through, and then the hardships that come from that.
Oh yeah.
Especially with Robin Williams being one of the modern estate dilemmas, seeing his family and being torn apart, really going through the court system and not having that set up. So that's really cool that you're in that holistic side or holistic point of view.
Because I think it's the same for the advisors, right? It's like I serve a particular problem that people have, which is filing accurate tax returns on time and not paying too much. That's the problem I solve. But in reality, I serve the person, right? It's like I'm dealing with the person and they have a lot more other things going on in their life besides that one little problem that's my direct responsibility. And so I think as advisors, we have the same problem, right? It's like you solve for a particular issue in the person's life of financial planning, but then at the same time, it's like you serve the person, and the person needs a lot more than just your little area. And so I've really tried to build the practice around that mentality.
That's awesome. Well, it looks like sadly we don't have too much time left. I want to make sure you get on to your other meetings so you don't stay behind for the rest of the day. I'd love to talk to you again, maybe if there's a little bit more free time. But just a few answers you answered were already insightful for me.
Yeah. Do you have any other like specific questions that you have about the tax industry or things that I could?
I think one would be being an entrepreneur yourself. You understand how starting your business was, and honestly, your niche is working with RIAs. Like, what are some of the tax pitfalls that you see 1 to 5 year entrepreneurs starting their RIA go through that they don't really recognize?
Yeah, and it depends on where they're coming from. So if they're coming from a W-2 position to going to being self-employed for the first time, that's a really big learning curve because most people are not used to paying the self-employment taxes and they're not used to withholding correctly. So that can be a problem really quickly, depending on if you're bringing a book of business with you and you're going to have good revenue coming into it. That can be a real issue. Biggest pitfalls that I see people make, the first is you probably, like, a tax professional is probably one of the first vendors that you actually want to source and find, because we can be really hard to find good ones. And then especially ones that are taking on clients. Like, my industry is a huge talent deficit. A lot of firms just don't even take new clients. So you probably want to solve for that one pretty early on. And at least pay for like an initial consult to talk to them to see if there's anything unique in your situation you have to watch out for. So it's making sure the self-employed taxes are that you're prepared for that piece of it, that you have a bookkeeping system or some kind of record keeping system so that you know what your profit is, because that's the real driver of the income tax liability. And then once you have that, being able to get projections done by a tax professional so that you're not getting too far behind on estimated payments. Because once you get behind on estimated payments, it's really hard to claw yourself back out of it.
Yeah, especially when the penalties start accumulating.
Yeah, it's just cash flow hard. If you're in professional services, it's really easy to run a pretty high profit margin business. And then all of a sudden it's like you're losing a third of that. So it's, it can be really shocking if you don't know. And I think for a lot of people, like, tax is not a mystery. Like, it's not a boogeyman under your bed. It's laws, right? So like, we know what's going on in your income tax situation pretty much like from year to year. And so if you don't know what that tax liability is, that's the first step, is figuring out what it is. And then you can do planning to, deal with it. But a lot of people just kind of ignore tax because they treat it as like, oh, well, I'll deal with it when I have to file the returns. But it's like, you've been accruing an income tax liability this whole time. And that is a known thing. It's just you waited until filing to actually figure out what it was. So that's the biggest issue I see.
It kind of sparked another question, but I don't know if you have time to answer
I've got like 1 more minute. We can do one more.
Okay. So then, coming from, say, I want to have a career in tax, not like public tax, but tax in the sense of running in my financial firm. Mm-hmm. What are some of the pitfalls that you see that your clients struggle with most with understanding tax law? Like, when you come into their life and try to answer these tax questions, what are some of the concepts that you see them struggle with most that you often have to explain?
Yeah, I would say the things I see advisors struggle with most on the tax side, part of it is like you really have to have a strong sense of like the ebb and flow of how income taxation works. And that comes down to like the timing of income. It depends on what kind of clients you work with, because if you're working, if you're basically B2C, like you're working with people who are W-2 employees, don't have a lot of complexity, helping them save for retirement, you're not going to have to know a whole lot, because there's not a whole lot that you can do in a lot of cases. So a lot of that's going to come down to retirement plan timing, and then taking advantage of tax advantaged accounts like health savings accounts and different little credits and things like that, and getting yourself educated on those. But, I think the big break and the big mental thing is making sure that you've got a plan for how you're going to deal with the tax situation, in terms of Are you going to have an enrolled agent internally? Like somebody's got to own the function. Are you going to have an outside CPA firm that you partner with to get it done? And being intentional around, like, it is a core need that your clients have. Are you going to serve it? How are you going to serve it, et cetera? Because I talk to advisors that are like run the whole gambit, and a lot of times it's the people will, where I see a lot of the flaws happen is when people think they can just add tax on as a rider into their business, and in reality, like, it's its own thing. It's difficult to deliver well. It's also difficult to deliver with a good margin if you're not delivering it well and you're not really intentional around it. And so it can be a really easy way to create a lot of operational drag in your firm if you don't have a plan around how you're going to be offering it to clients. But then in terms of like just the regular tax planning that goes on with financial planning, a lot of it comes down to just having a good handle on the retirement accounts, and then also having a good handle on, when are they actually appropriate to invest in and when are they not? Because I see a lot of people just use them as a catch-all for everything. And in reality, depending on what the client's goals are, a lot of times they don't actually serve the client that well, but it depends.
That's awesome. Yeah, I can definitely see how those can obviously be pitfalls for a firm. Coming from, I interned at a firm that had a huge tax appendage. So luckily they had a very good workflow and process in place to handle it, doing 400 to 500 returns every season.
Yeah, no, and that's as much as, a lot of small CPA firms will do. So it's, that's a good, you need to have a plan with it, and it needs to be very intentional. And also at the same time, it's like, how much of a revenue driver is it? Does it operationally make sense? It's like, for the amount of operational drag that it creates, could you actually get better margin by just serving more clients and not offering tax? Like, that's always a big question that I have when I see those kinds of arrangements. It's like, but it just depends on the practice you're trying to build, and the relationship you want to have with the clients and what the clients need and the complexity of that need.
That's awesome. Well, Catherine, I look forward to some of your future podcasts so I can continue to learn from you. But thank you for your time.
Yeah, likewise, Justin. Thanks for setting this up. I appreciate it.